Welcome to Global Risk Community Chat. Today, our guest is Christian Moger. I'm very happy to have you here today, Christian. Welcome.
Hi, thank you very much for inviting me today to participate in the chat, and yeah, look forward to our discussion.
Yes, likewise. So before we get into the topic, let's start with a short introduction. Can you shortly introduce yourself to our audience?
Yeah, sure, no problem. So my name is Christian Moger. I'm a business development director for a company called Enverus. We're quite a new brand name in the industry. However, we have been around since the 1990s, and we provide software solutions to the energy trading and risk community, in particular in Europe. So I've been in that role for the last 4 years. Before that, my work really was with the energy exchanges, particularly working on the UK gas market, and then moved to Amsterdam in 2008 to set up or be part of a team to develop the Dutch Trading Gas Hub, which is a TTF, and as well as manage European power electricity markets as well. So I did that for 8 years and then joined the Intercontinental Exchange for 4 years, developing energy trading hubs, trying to get more traders to trade, and then moved to Enverus as we are now. So that's what I'm doing now.
Yeah, sounds good. With that being said, then let's get into the topic now. So what would you like to talk with us today? I hear a lot of course, energy markets. So
Sure. Yeah. So energy is obviously hugely topical at the moment. There's just so much going on in the energy world. And so I thought it'd be a good opportunity just to talk about a little bit of the changes and the transformation that we're going through, in particularly managing volatility and the challenges that some risk departments and traders are now having as we move from an old world scenario to a new world scenario. And then sort of thinking a little bit about how digitization can help as well with managing that increase in volatility and yeah, the changes that are going on in the world currently. So that's yeah, that was the sort of focus.
yeah, sounds like a good topic to discuss because it's also very trending and I think overall important for the general population as well. So yeah, then let's get into it. So what are some key things that you would like to share about regarding this?
Yeah, so really I was going to, as you mentioned, for people, population are very focused, of course, on the energy prices and the increasing costs, etc. And so it's really, I thought it was important to maybe talk about the volatility and some of the things that might be driving that, and some things that the risk managers have to, some of the challenges that they're facing, because in the old days, energy risk management, I suppose, was a relatively straightforward process. Things were done in bilateral contracts for brokers and exchanges, and there were only maybe 2 or 3 sort of core commodity products that would have been traded. And since that time, of course, we're seeing an increase in renewable energy and the importance of renewable energy and moving towards a zero carbon environment and electric economies as well. So there's a lot of huge challenges coming in place on the back of that. And one of the key things is renewable energy used for production of power. Renewable energy is, of course, volatile. It's not predictable. So it's based on wind, solar, etc. So it creates a lot of challenges for people that take a position in the energy market and knowing how to manage that. The other thing is it's going to increase a lot of new products. So products that don't exist today, that may exist in the future. So you may see more carbon products come on board, as well as products like hydrogen as well. So those products don't exist, or if they do exist, they have very low levels of liquidity. So they're quite risky positions to take a trade in. So you're going to see those develop over time. So it's about increasing the amount of data that companies have to manage new products that they don't necessarily understand as well. So it's thinking maybe a little bit about how digital assets can really help manage those positions and make organizations take better informed decisions, let's say.
Yes. So I hear, of course, a lot about here, that risk managers should be doing much more or more like, maybe take a different stance. So, and also with, of course, the technological advancements and, how can maybe risk managers, like use these tools at hand to utilize or, like maybe do something against volatility, or
Yes,
battle with
often,
it.
sure. So oftentimes what we're seeing is fragmented systems or lots of different systems to try and cope with that volatility, and they may not be fast enough to respond. So, for example, electricity markets can trade up to 15 minutes, 10 minutes before delivery, and that's much too quick for a trader to be able to manage that. So, a lot of companies are implementing AI technology, so automated trading, to be able to manage that, and that obviously creates a lot of challenges in the middle office to be able to deal with those rapid changes. So it's being able to create uniformity and ways of managing all the data that's coming in to be able to make those well-informed decisions. So rather than having dispersed and traders and risk managers using different systems, is to create a platform with straight-through processing. We can have trade to settlement type of infrastructure. So that's one of the key ways to do that. A lot of trading now is done real time as well. So you see prices coming directly from the markets and go straight through to the risk and settlement processes as well. So you need to be able to calculate very quickly those prices that are coming through as well. So particularly curve management and making sure that everyone across the company is using the same system to receive those prices and the same business logic to be able to calculate those prices as well. So quite a lot of times we'll see individual traders using their own Excel spreadsheets and their own calculation methodologies. That might differ, or it might be not quite in line with what the risk managers are using. So it's how to create that uniformity across those different business units, so that everyone is working off the same pricing and the same settlement, and making sure that the P&L is correctly calculated.
Yeah.
Which in a normal environment wouldn't necessarily be a problem, because you'd have more time to react and change things in the old days. But today, with everything changing so quickly, then you really need to be able to make sure that you have the digital assets and the processes in place to be able to manage that.
Yeah. Sounds good. Thank you for that insight as well. So with that being said, another question I have, kind of like a follow-up. What would be the takeaway point you would like to share with our audience? So like if they were to start with one thing, what should they start implementing?
Well, I think the main takeaway points is to really be prepared for change, because for sure there's going to be there's a lot of pressure internally and externally to be able to cope with that increase in volatility. So for sure there are going to be new products. For sure the markets are going to get more and more volatile as we move towards that renewable, low carbon environment. So make sure that you have the planning and ICT infrastructure in place to be able to cope with that change. So that would be my main sort of takeaway point. Keep it simple and really focus on best-in-class optimization of your trade processes and risk processes.
Thank you for sharing that as well. With that, I only have one last question remaining, and that is how it is for you to be part of a risk community.
It's really important. So we're engaged with the risk community and the risk world. Obviously, it's very important for us to be able to talk to the industry, understand the challenges that they're facing. So being involved with this type of community really helps us get that feedback and really understand some of the problems that your members are having, and where we need to put our product development, or where we may already be able to add value.
Thank you. And with that being said, unfortunately, we are out of our time for today. So I want to thank you so much for joining us today, sharing all your insights, and it was very lovely to chat with you.
You too. Thank you very much, and thanks for the opportunity to talk to you.
Likewise. Take care.
Thank you. You too.